Business Courier's front page this week, P&G under fire. It's been a long time since Procter & Gamble felt this kind of heat from the street. P&G has lowered its second quarter profit estimates for 2012, resulting in a torrent of criticism from financial analysts. P&G shareholders are reportedly frustrated with the lackluster stock price. It's hovered between $60 and $70 per share for most of the last 5 years. The analysts say there needs to be a dramatic change in the way the Cincinnati-based consumer goods company does business. In October, P&G announced a $1 billion cost-cutting restructuring, but critics say more needs to be done. Some of their suggestions include even deeper cuts, the spinning off of brands or divisions into smaller publicly traded companies, and an end to P&G's hire-from-within corporate culture. Business Courier senior reporter Dan Monk reported this story. He joins editor Rob Dahlmeyer with more insight. Gentlemen.
Brian, thanks, and Dan, thanks for being here. With apologies to all the other big companies in town, P&G really does occupy a different stratosphere than anyone else. They've got thousands of local employees, $174 billion market cap. But this is a company in transition, isn't it?
Yeah, it's really interesting right now what's happening with P&G. They've gone, or they're going from a U.S.-centric company that depended on their marketing skill and innovation to get consumers to spend more and more on their products. And they're transitioning into a company whose future really is going to depend on finding new customers in developing countries. You know, China, India, Africa, and Latin America are the places where they're now looking for business, and it's a whole different kind of market. Lower price competitors, smaller competitors are tending to do well there, and analysts are getting frustrated over P&G's strategy. They think the strategy is right. They don't think P&G is moving fast enough to accomplish it.
P&G's really made a big mark in some of their top shelf items, really. They've been able to put pretty good price premiums on their products.
Right.
But is that part of the problem? Do analysts see maybe they're spending too much emphasis on those more expensive products?
It is part of the problem, and the entire cost structure that goes with that whole model is, I think, what analysts are really targeting right now. You know, P&G spends billions on research, billions on marketing, advertising, and there's a lot of overhead that comes with operating these family of, what is it, 22, I think, billion-dollar brands. And so, you know, the cost structure is really what analysts are focusing on when they say you need to cut deeper, you need to spin off brands.
So for employees of Procter & Gamble who obviously have been sort of living through this change that has been going on over the last couple months, when they read these analyst comments, and the analysts that you talk to were pretty firm about their beliefs, how does P&G, how do the muckety-mucks at P&G react to that? What do they tell you? P&G
says they talk to their investors all the time. They talk to these analysts all the time. They're communicating a strategy that they're trying to follow, and they think they're doing a good job, and they cite signs of progress. But at the same time, they recognize, I think, that the criticism is there. And later this month, there's a big investor conference that's planned, and P&G has promised more detail. Some think they're going to announce some deeper restructuring programs, and so you know, the issue isn't over. P&G is going to be addressing this in the months ahead,
and I'm sure we will be addressing it at the Courier as well. So thanks for being here, Dan.
Thanks.